Because we're back with Mako Mine here with Mr. Akiba Leisman, and everything is going well. Market cap is hitting basically all-time highs here week over week. Currently sitting at 350 million USD, basically. Cash at almost 30 million USD. So why don't we start with San Albino? We've had two more quarters. Financials been released since last we spoke. Quarter over quarter, all-time sort of records in revenue. More or less, close to operating cash flow. So basically 70 million USD in revenue H1, and then 37 million in operating cash flow combined for H1, Q1 and Q2 added together. So basically over 50% sort of operating cash flow margin compared to revenue, very impressive. What's your comments on San Albino operating performance for Q1, Q2?
Yeah, I think and thanks for having me on, Gorm. I would say 2025 is kind of what we expect San Albino to be. This is always kind of like a difficult operation that needs to be scheduled and managed. But I thought Q1 and Q2 were more or less kind of what straight down the fairway would look like in terms of production performance. And when the mine is doing what it should be doing, it shows you what the underlying profitability of the operations are. So we generated US $18.2 million in free cash flow just for the quarter. Now, part of that was a little bit of working capital movements. So a metric that I like is better than that is mine operating cash flow, which basically strips out a lot of the stuff that goes at the corporate level, and even to a certain extent some of the tax items that we have. But it shows you kind of like what the unit cost operations are with the mine, and that number was close to US 17 million just for the quarter. So you can kind of see what a normal quarter at $23 an ounce can do for a relatively small mine. And when we talk about profitability, and I made this comment in my quote, is that I often feel like people get mine myopia, right? So when you have a single operation, people are going to be focused on just what the mine is capable of doing. And then back when we were a one asset company, I would use this terminology kind of reference to as reference to the fact that people would ignore our exploration upside over at San Albino. Now that we're a three asset company, a fully operational mine, a mine that's in the process of turning back on, and one that's effectively a cost center, right? It's a development project over in Guyana. The profitability numbers that we're putting out is kind of in the context where the vast majority of our NAV are effectively either neutral or cost centers to the company. So the profitability from San Albino as it relates to the corporate is actually more than what we're printing on paper, because it actually includes these cost centers as well. Now, on the second half of the year, this was scheduled as well, is that we're intended to have like a marginally weak Q3 purely due to mine scheduling. And then in Q4, we're aiming to actually have a record production profile. So if gold prices hold up and are similar to the 33.23 that we realized in Q2, you're going to see Q4 numbers not only with San Albino but also with the Moss Mine in full ramp up mode will be a step change from a profitability perspective to what we've been printing, which is starting from a level of a pretty high value.
So you set the expectations for H2. When you say marginally weak, is that like 8,000 ounces, 7,000 ounces, a slight step down?
Yeah, I don't want to give specific guidance over here, but this was scheduled and known about. In fact, I don't want to call out any of our directors, although it was Lori. So we actually gave our budget for the year, and we actually showed Q1 looks normal, Q2 looks Q3 looks a little weak, and then Q4 is like a record. She says, "Well, can't you like just mine a little bit of Q4 and Q3?" That would be possible if the actual ore was situated on top, but unfortunately, we have to deal with geology and reality. So we do have to go through a little bit of a transition from some of the phases that we're mining in the central part of Las Conchitas as we start to develop the second and third phase of the southern part of Las Conchitas, which is where the real high grade is going to come in. I've mentioned this time again. You really cannot look at us on a quarter-to-quarter basis. But I actually think, coincidentally, potentially ironically, H2 is actually going to look and scheduled to look pretty similar from a production profile specific to San Albino to H1, albeit it's going to be back-end loaded to Q4.
Yeah, well, very pleasant situation, I think. So in terms of, we should also just point out the exploration results out of El Golfo has been, to say the least, very impressive. I mean, basically an ounce, 4 meters estimated true width, over an ounce, 6 meters, both. I mean, basically at surface. So you're making a discovery there, bona fide discovery, which looks gonna be an open pit. It looks like. But what's your comments on it? What's your thinking?
Yeah. So our headline hole that we hit, which was, I don't know, two months ago, I think was the original one where we hit about 40 grams over close to 6 meters estimated true width. We actually couldn't call a discovery because it was only actually on the second hole that we drilled, and we actually have criteria that we need to meet before we actually declare a discovery. So we need to have 3 hits within a plane that shows some level of mineability associated with it. That being said, El Golfo was always the second highest priority after San Albino, even when it was first known about prior to Mako being Mako. So when this asset, which was in its more or less current iteration starting back in 2009, there were 2 targets, which is the 2 areas of the most amount of historical mining, which in the context of global mining was actually not all that much. The first being San Albino, which is an operation which has been in artisanal production since the late 18th century, and then to a certain extent commercial production in the 1920s. By commercial production, I'm talking about like 10 tons a day type operation, maybe 15. The historical plant was still there when we picked this up. The second most advanced project was actually a mine that was put into commercial production prior to San Albino in the 1910s by German businessmen. And he closed it down simply because a hurricane came by and washed everything out. And it was never really reevaluated in any real respect ever. I mean, there has been a local landowner that have had a series of ebbs and flows with the negotiations with us to have access, really since we first got involved in 2009. And then the relationship with that family has gotten markedly improved starting last year. And now we're able to actually have like a real good exploration program and kind of like an understanding about what the long term will be for El Golfo. So yeah, there's no question this is a discovery. It's no question that from a prospectivity perspective, this is actually was always higher on our priority list than Las Conchitas, the area that we're mining right now over at the overall San Albino project. So this always was going to be the number 2 target that we were going to go after, and it's not surprised that we're making these discoveries, because we knew that there was going to be a coherent high grade near surface ore body over here. Still early days. We've basically discovered at least, I think, 7 separate veins associated with this. And now we're talking about strike lengths, and take this with a little bit of a grain of salt, because it's not going to be completely continuous across this, is that it looks like the strike is continuous from El Golfo all the way up to Las Conchitas. So you really are talking about something that's going to be in excess of 2.5 kilometers in terms of strike. And then from a dip perspective, we already have holes that if our geological models hold up, and we think they will, that are proving at least 330, 340 meters of dip potential, and that's just limited by data. So
sorry, Akiba, how much have you actually drilled there since the first discovery hole, whatever we call it?
In total, between RC and core, which is a much more ramped up program right now, we're pushing close to 7,000 meters at this point. By this time this year, our original budget was only supposed to be like in the high 2000s. So we pulled in another core rig to El Golfo to supplement our RC rig. And I think there's probably going to be a decision to have more on site to kind of move some of the rigs that we've been focused on some of the more regional targets, and then really start proving out a next mineable deposit that we have over El Golfo.
So this is a bit of a silent killer, to be honest. I mean, this is a pretty big deal.
Yeah, the way that I describe it is that I haven't seen anything at San Albino that is different than what we've actually been mining. There are pluses and minuses to continuity. There's pluses and minuses to whether the ore body is going to go with the surface topography or against it, which will determine how much you can pull out from an open pit perspective versus how much you can pull out from an underground perspective. But we find this all over, and this is always it always played with investors' minds, especially when we were a single asset company, when we had a tricky ore body that requires a lot of drilling to prove out a mineable resource. That you're never going to have like a very large delineated resource unless you want to lie about it, which a lot of our competitors seem to take that choice. So unless you want to do that, you're always going to be limited with a certain amount of mine life, and it's always been difficult for investors to grab put their heads around something like that, knowing that all of the geological data was there to support an operation that would be in existence for many years to come at these kinds of run rates.
I mean, so far, are you seeing more towards, is the morphology tending towards open pit or underground at El Golfo so far, or is it a bit of just a mix?
Both. I mean, there's two targets. There's the one which was the original headline hole from a couple months ago or so. That was an area called Pavona. That one goes somewhat against topography. So I think if we're actually going to be finding an open pit, you're probably going to be limited to 30, 40 meters from surface. And then the second one, which was the more recent press release from a couple weeks ago, it's an area called Potosi. That's going with the ore body. So if you actually prove out something, especially if you can find some up dip potential over here, that's going to be going with topography. And then you can potentially have open pits that can be as deep as what we had over at the primary San Albino West pit, which went from as the air breathes, probably about 120 meters from surface. But that equated, based on our the dip angle, it equated to about 600 meters of strike of dip.
Yeah. So I guess what's your hope for this? You've accelerated the drilling. We discussed last time, basically established that it is feasible from a quote unquote discovery to bring it into production and feeding to the mill. 3 years is feasible.
Sure. Yeah.
So what's your hope here? You've already accelerated drilling. Do you think we're starting that timeline now?
Yeah. So the way that we get open pit operations operational is that we'll wind up proving out a certain amount of resource. Obviously, we'll need to consolidate the surface rights, just like we did over at San Albino and Las Conchitas. And once we have that, we apply for a permit, which I think, as your listeners may know, we've gone through a couple of iterations of permitting about open pits. Each one was delayed by about 4.5 months, which a couple of things. One, I don't think that had anything to do with the Nicaraguan government slowing things down. I think it was just because it was new. It was trying to testing the waters of what accelerated permitting looks like in a jurisdiction like this. So a lot of those hiccups that have happened over the last few years hopefully will be resolved now, because we kind of know how to submit a permit in a more accelerated fashion, and then the government likewise knows how to review a permit in a more accelerated fashion. So yeah, no, I think those timelines are very valid. And then there's the other element where once you actually prove out an open pit to start, then you can go and start proving out the underground, just like we're doing over at Las Conchitas. So the expectations over there are that we're going to be fully permitted to go underground by early November of this year. And then, just because of the nature of the underground ore body, we'll be mining underground over at Las Conchitas, actual mineralized material by late Q1 is potentially early Q2 of next year to supplement that. And then El Golfo, it's early days. I mean, we have 6,000 meters or so of drilling in this area, where if you actually look at the entirety of our database is probably, I think it's probably pushing Actually, I haven't even seen these metrics for a while, but I would guess it's probably pushing close to 380,000 meters since inception, 2009. I think a lot of that can be compressed just because we kind of are more familiar with the ore body. But you can see it requires like a continuous level of drilling to go and prove out these resources, which is, again, it goes back from an investor's perspective, which drives people mad. Is like, wow, how can you start a mine with only like a 3 or 4 year mine life? Well, it really is a fundamental question, is that do you want to spend literally tens and tens and tens of millions of dollars before you're in cash flow proving something out, just to apply an investing heuristic to investors just so they feel more comfortable in their investment? I'm somewhat sympathetic that, because I used to be on the investor side, and it's actually difficult to underwrite things on the back of blue sky. So it wasn't the primary reason why we went on an acquisition strategy over the last year or so. But a lot of the assets that we have acquired are to solve some of those issues with deposits that can actually prove out much larger delineated mine lives to make it easier for investors to value a company like this.
So to crystallize for people, with El Golfo, are you still at the point where you're sort of poking around across the strike, seeing which place you're going to zoom in on, or have you picked a couple of places where you're zooming in, and now you have a hope to sort of get to a point where, okay, we're going to spend 6 months, drill it out, and then we're going to initiate permitting. That's going to take X amount of time, and then you'll get into actually start stripping. What's your?
Yeah, we're definitely not in infill mode right now, right? So
No.
it's still like trying to find the contours of how big and specifically continuous this is. We don't have expectations that it's going to be like a 2.5 meter strike continuous pit over here. So it'll be a series of pits potentially over time. But we haven't even gotten down to a point where we're actually proving out an actual mineable pit on either one of our two primary targets over at Pavona or Potosi.
Yeah.
But it's always going to be, it's a continuous process. It's like, all right, we got we got our open pit mines over at Las Conchitas, and we have our underground mines initially at Las Conchitas and eventually at San Albino as well. And then El Golfo is a little bit further, that mouse is a little bit further down the belly of the snake, if you will.
Yeah, we'll check in on that next time again. And with the underground, so you say that you will have the permit to initiate, I presume, driving down to underground, or have you been able to drive down already? Or what's the status?
No. So there's been back and forth on geotechnical questions from us, from them, and then community visits and everything. Both the environmental agencies and the mining agencies have made multiple visits to site. I think everybody has their full application that they're going to review, and then it usually takes at least a couple months from where we are to give like a final approval. But I think that's actually a reasonably conservative estimate on when we actually will get permission to actually start driving that first decline down in the early part of November of this year.
Right, and the first mine, your expectation getting into Q2, I think we established it's going to do 100-200 tons per day.
Yeah, I think that's right. So the actually the Mina Francisco is the first target area that we're going to be driving the portal. Mina Francisco, in terms of what we've found to date, is probably we would rank it as probably the second, maybe third, but likely second best vein of grade and continuity for this. And we accessed it through an open pit, but this was definitely one where the ore body went effectively orthogonal to topography. So the final depth of our open pit over at Mina Francisco, I think, wound up being 12 meters. That was it. We were standing on, literally with our feet, 25 gram material over there. But in order to actually go any deeper, it really required taking down an entire large scale hill. And it's just like more economic to go and access this through an underground. So ironically, because it's now standing at surface, that 25 gram material, that's probably going to be the last bit that will ever be mined, because we're going to be mining everything underneath, and then we'll take out the pillar at the end. So that 25 gram material is a little bit lonely. We've covered it with a little bit of material so as to keep people's away from the shiny stuff a little bit. But yeah, it shows you how different things can be if it goes with topography or against it.
And for the sort of the fullness of next year, are you permitting only this mine, or do you have several permits for underground mines in process?
There will be the underground mining area will have an area that makes up a pretty decent part of Las Conchitas. So there will be opportunities to have a second or even third portal over time, but it won't be everything that we'll ever need in areas that we think have a better than 50-50 shot of going underground at some point at this point. So there's always going to be time to come back for permitting, and it goes back from a jurisdictional perspective, right? Nicaragua in and of itself is an extremely controversial jurisdiction, but if you take away the geopolitics for a second, and then just look at the assets that what we have, and then the jurisdictions that we operate in, and our business model, which is effectively bootstrapping, getting things up and running fast, getting cash flow, and then reinvesting in the cash flow. There are limits to the jurisdictions that you can operate that way, because if you wind up getting caught on a permitting delay for whatever reason, it eliminates your entire business model going forward. So San Albino is not a mine that you could effectively mine if you applied the same geology and then moved it to a region like Mexico or even Canada, even the United States a year or so ago and before. You wouldn't be able to mine this way, right? Because it always requires, you have a limited mine life, and you always have to come back for the next permit and the next one and the next one and the next one and the next one. So it's a jurisdiction that allows us to operate in this bootstrap fashion. I would say Guyana is similar, where you have a larger scale project over there. There's a lot of things that we need to do to accelerate these things, and the government is small enough and flexible enough that it can accommodate companies like ourselves to move things forward. And the United States, which is 180 degrees of where it was a year ago with respect to mining, is now becoming a similar type jurisdiction that allows for bootstrapped type projects. This was not the case 12 months ago, and it was always kind of like an internal secret where people would criticize Mako, saying, "Oh, I don't want to invest in you because you're in Nicaragua. I only invest in good mining jurisdictions like the United States and Canada." And basically, we like publicly, because we have to have a public base, we would nod, that's a really good point. And then as soon as we got off the phone with the investor, like me and my team would just like laugh at them. It's like, you do not know what it takes to build a mine in the United States and Canada these days, and that's just not how you can wind up running a business of this type. So I do think there's always been this little weird difference in terms of what investors want and what they actually think they want, right? And those are two very, very separate things.
Well, I guess you speak to a lot of investors, so it's sort of top of mind for you. But you will always deal with, I guess, irrational people. So I mean that's good. I don't think there's too much more to say with San Albino. I mean, obviously, I'm always trying to dig here to gauge when you will get to the maturity of operation, where you actually make the incremental throughput expansion. But it sounds like perhaps you would need 2 or 3 underground mines where you're getting steadily 300 tons per day underground feed or something like this before you make that decision, because the underground mines in some respect is also a function to relieve pressure on the open pits.
Yeah, and like I've described this before, is that so I was about to say we're never going to have like the eureka moment. Like, that being said, ironically, we're actually in discussions to get a concession named Eureka from the government, which actually will be rather important for us. But you're never going to have a eureka moment based on the geology that we understand today about putting in 1, 2, 3, 5 drill holes and discovering a 500,000 ounce, multi-million ounce deposit. That's not the type of deposit San Albino has ever been. So for me, the quote unquote home run, unless something completely out of the blue and changes our views of geology, to me, the home run with respect to San Albino is to basically get the exploration system to a point where internally and externally everybody kind of understands that even though there's a relatively short delineated mine life, from an internal planning perspective and an external investor valuation perspective, you can almost treat that as effectively a, uh, a continuing operation, right? So once that happens, operationally and from a valuation perspective, that's not an insignificant adjustment. So as we discussed on the numbers at $33.23 gold, you're looking at something that is effectively pushing, just for one asset, US $70 million or so of operating cash flow on an annualized basis, right? So it's like, once you actually get to numbers like that, and you can apply a real continuous multiple, it changes everything. It's probably worth more than what the company is today. Like, we wouldn't value that ourselves at this point, because we're not there internally. Investors wouldn't value there necessarily at this point, because at the end of the day, we've been mining this now for 5 years or so. So it's not like we haven't been mining this for generations. But over time, when to me, the home run about San Albino is to eventually migrate to a point where we're doing what we're doing, and it's probably not going to be that much bigger. I mean, there are probably some opportunities to expand. But so long as we're doing what we're doing, but everybody internally and externally accepts the fact that that's going to be what you're going to be doing for a really long period of time.
So you wouldn't say that, I mean, looking at the valuation, sort of breaking it down, how are the more sophisticated people in your judgment? I guess I don't know if you have analysts covering you at this point in time, but how are they making? I mean, how are they valuing the company? You think? Are they assigning value to Eagle and Moss, or are they just looking at San Albino's cash flows and valuing them?
Yeah, well, right now we have zero analyst coverage. We had one analyst cover us for 5 weeks, and then the investment bank actually went somewhat under. So hopefully that will change over the course of the next few months. So this is it's kind of the interesting thing, because we're now a much more mature company, so we actually have to talk to prospective, not current, but prospective analysts. Number one, and then two, specifically for the development of our company, both in terms of project finance potential for Guyana, or even subsequent acquisitions that may or may not require capital. We have to discuss things from an external perspective, and in doing that, we have to show corporate models, right, on what that comes about. So whether you're looking at this from an equity side, from a lending side, you actually see our corporate models, and the NAV percent. We won't get into actual numbers, but the percent of San Albino relative to the corporate is tiny, right? It's less than 15%. And heavily weighted towards the other assets, strictly from a NAV perspective. And this is where I go back to making my points, where what investors think and what investors want is a little bit different. The reality is, if you actually think about this logically, there's no way in hell that San Albino is only worth 15% of importance to this company, because it's essentially 95% of our cash flow right now. It's probably by the end of the year, it will still be about 65% of our cash flow, 60% of our cash flow, thereabouts. And it allows us to go ahead with our effectively managed bootstrapped strategy. Without it, everything kind of falls apart. If you don't have the ability to internally fund your bootstrapped strategy, if you will, at that point in time, somebody else is wearing the boot, and it's going to be doing something very different than strapping to you, right? Because if you do not have the ability to go and leverage off your cash flowing assets to do the next thing, very quickly your entire business model falls apart. And this is something that was always obvious to us, but it's something that I think was missed by a lot of our competitors who try to do very similar things. So the San Albino is definitely more important to us than 15%. That being said, when I'm sympathetic to lenders, I'm sympathetic to sell side analysts, I'm sympathetic to investors, is that you have to have something on paper to at least start your valuation process. And we really can't supply them with San Albino anything more than what we've engineered a mine plan around, which is always relatively limited.
So switching gears to Eagle, just a bit of a check-in here. So progression at Eagle, what has been the activity since last we spoke, I guess in March, on the back of the Moss acquisition? and sort of just remind everyone that the coming items leading up to a financing package and the full timeline to get into production here. Just a refresh.
Yeah, so for Eagle Mountain, really since we acquired it in July of last year, so we've now owned it for about 13 months. Really, everything has been about doing the technical work for hydrology, geotechnical work, full-scale plant layout, which is kind of a back and forth between what we need to do and our mine plan. So there's definitely an iterative process over here so that we can be in a position to submit our EIA application. Now, Guyana threw us a little bit of a curveball, which actually I don't think is going to be like that big of a deal from a timing perspective. But they accelerated their elections from what we thought was November, and kind of like a lot of our plan was to make sure that everybody was ready to go prior to those elections. And then for a variety of reasons, because at the end of the day, governments are political bodies. So for a very real and tactical political decision, they decided to move forward the parliamentary elections to September 1st, right? Like imminently in the next week. So in doing things, I think the review process has been slowed down a little bit to the point where we need to do certain things before that EIA can be officially submitted to the government. And one of those things is to actually have like the full sign off from the EPA on the public review process, which frankly should have happened 3 or 4 weeks ago. There's no question that got pushed back to after the election. Everybody is going to come back with different bosses and their different cabinet positions and ministry positions associated with it. So that's going to push our ability to submit our application into the early part of next year from what should have been October, thereabouts. That being said, I don't actually think that's actually going to change our construction schedule, because Guyana, going back to the bootstrapped approach over here, has been more than willing to provide interim permits to start the civil works. So our expectations were always that we were going to get started in very late Q1 or early Q2 from doing the stuff that we needed to do to get started, with the expectations that our EIA would get approved immediately thereafter. That EIA approval, there's no question that that's gotten pushed back by at least 2 months. But I don't think it actually changes all that much from a construction schedule. And with respect to financing, is that we're still pretty darn confident that we'll be able to build the initial project for the saprolite at less than a US $100 million clip, which is more or less, including contingencies, what the January 2024 PEA said. We're pretty confident we'll be able to maintain those numbers. And this is kind of like a fundamental question that I also get into internal debates with our largest shareholder, Wexford, about, is that I think everybody's in agreement that this company will not have US $100 million on its balance sheet in the context of when we make the construction decision. That being said, the construction will last a year, so there will be 2026 cash flows that we can apply to this. And then it really is a debate about how much of a needle do you want to thread here. I think we're a big enough company that we do need to take a little bit more conservative approaches with financing than, let's say, we were doing back in 2020 and 2021, when we were a single asset, kind of like really small company. So I think invariably there will need to be a financing of some sort, but that number is getting less and less every day just because of the cash flow that we're generating from San Albino and eventually Moss.
Yeah, I mean, I almost feel that the financing in question would sort of be a courtesy. I mean, because you will certainly have 50 million USD on the balance sheet safely across that process. So at least half is going to be equity for sure, just cash. And then I would assume you could lever to some extent, get some debt on that if you want to, but you could also do a 5% dilution event and get $30 million in at that point in time. So I guess,
yeah, that's right. All of these are, I mean, there's a spectrum of stuff that we can do. And then I think the important thing is that it's going to be a number. And then as always, we're aware of what's out there, and also what our internal tools of our toolkit can do. We're pretty creative about that. So starting from reality, which is the number, I think most investors can assume that we'll choose the one to get us that number in the that will do the best thing for the company, both long term corporate performance as well as for the stock.
But it sounds like fair to assume, because you submit the perm, or you get the permit sometime early next year, essentially. Then you're able to finance, because if you want to get debt, I presume debtors would want to have the official permit in hand, or what would you expect?
Yeah, right. So I would imagine, right, that's probably true across most lenders. Probably not all, but across most. And in fact, we do actually have term sheets in place which are not conditional on like full Guyanese EIA approval. That being
Right.
said, I'm not entirely sure they're term sheets that I actually really want right now. The So it's a range. So part of that is what you have access to, cost, lending, bells and whistles that come with a lot of these financing packages. From as a practical matter, is that the cash on our balance sheet will be the first port of call of equity going into Guyana, and
Yeah.
we are in full control of how that gets spent. We, as a company, have full confidence that Guyana will allow us to start construction, and will eventually. It's going to probably take some time. I think G Mining is a good example of that. Is that their EIA approval has been pushed out many months, but it also hasn't really affected anything. Right? They're spending hundreds of millions of dollars moving Oko West along expeditiously, and in fact at lightning speed, even though that EIA has not come forward yet. And I'm assuming, which may or not be a correct assumption, but I'm assuming a similar analog would apply to us when we're ready to go, about a year and a half behind where G Mining was with Oko. So we can always spend that cash on our balance sheet prior to a full lender approval, if that's the route that we're going. So if we have I think there's actually value. Let's say we're going down the debt route. I actually don't particularly like. Obviously, it's a trade off, but it is one of the examples where we could enter into a facility that would be conditional on EIA approval, knowing that nothing's going to slow us down because we'll have enough capital to advance things until that event actually happens.
Right. I mean, basically, you have many options. 100 million USD is very overcomable for you now, so we'll just leave it at that. I don't think it's a cause for concern. You're competent in this.
Yeah,
In this.
actually, and that's a good point about the number, because it actually changes my frame of reference too. We like to we beat our chest a little bit, not too much. I think if you actually look at my historical commentary about the Gold Source acquisition when we announced it in February to July, we basically were saying, yeah, this is like a little bit bigger than what we've done before, but still within the framework of what Mako can do. But there still was a lot of loosey-goosey language about our capacity to do a $100 million project. But then a couple of things changed, like obviously like gold price. And I don't know what clicked, but I would say probably starting relatively recently, I would say 2 or 3 months ago, it got to the point where I'm 100% confident that 99.9% confident that financing is there. It really is no longer a binary risk about whether or not that can happen. A lot has to do with us, our execution. A lot has to do with the broader market space, because we are in a bull market right now. But the importance about this is that because I am now nearly 100% confident that we can do something like this, it allows me to actually increase the amount of tools that are in our toolkit. It allows me to actually start thinking about the world a little bit differently than what we used to. We often got a lot of questions from investors. Well, why do you look for things so small? There's a few reasons. One is usually that's an overlooked part of the market, so you can get valuations that are quite different from medium and large scale assets. But also in the back of our mind is that we were a little bit shell shocked with the bear market of gold, where for a long period of time, effectively there really weren't many external financing sources for for Mako. So while we didn't really need post 2020, with the exception of some very minor things from financing from the controlling shareholder, always in the back of our mind, we're always looking for assets that were kind of capable of doing internally if needed. It'd always be preferable to do things within the four corners of Mako and what we can do for cash flow. Likewise, always what we could potentially finance externally, but always in the back of our mind that Wexford would be there. We're now a different company, right? So we can actually look at things on a much bigger basis, knowing that we actually have the ability to transact on things by ourselves. And that is a very, very different thing. So for me, there are decision processes that are made via constraints. And when certain constraints are removed, there's just more opportunities, and it builds on itself. So a lot of companies went through a vicious cycle of what a bear market looks like. This is what a virtuous cycle looks like in real time. Is that when constraints are removed and you can look at the world differently, it opens up a lot more opportunities than would have existed if that didn't happen.
Yeah. Since we're on the topic, I was planning on getting towards this sort of reigniting again the corporate development. I'm sure you've been as active as always looking at things, but the fact is, as you say, this financing to get the Saprolite project going is, I mean, it's obvious it's going to be completely fine. It's not going to be a big deal. It's not going to mess up the balance sheet at all. And then Moss is basically the acquisition of the century, it seems. Basically, you pay a little bit of money, you get an asset that can get turned around by competence, essentially, and then it starts cash flowing, and it will become a cash flowing unit for you. So, in addition to the portfolio, obviously. So, at that, with this position, do you start getting like aggressive in a different way? Can you sort of talk a bit more about that? Because still acquiring large amounts of debts, it would have to be on an acquired asset level. If you acquire an asset, you indebt that asset to sort of take it over. You could not indebt the corporate balance sheet to a large extent because you have the sort of this valuation problem with Albino still. Or what means would you go about? Would you be willing to issue equity, or because you're still probably very undervalued? One could argue, obviously. So, what are your constraints in your thinking? How have they changed more specifically?
Yeah, so I mean, with respect to from an internal perspective first, the like everything is really about funding the business through cash flow. Everything that we do from an expansion perspective, we don't even like model it, because the returns that we get for exploration or to the extent that it's possible asset expansion would far exceed any hurdle rate. That basically, that's the first port of call, is that our actual mines growth capital, it's some of the easiest investments for us to make, and then you can see just how much residual cash we generate beyond that. So there's never been a need for equity to grow the business that way, but with respect to external acquisitions, it's a simple question: is that does your NAV per share, and this is actually an important thing, does your NAV per share go up if you value NAV correctly, right? So I think most people agree, yeah, no, we have to increase our NAV per share. Wow, look at us. But then they fall on that second part, right? That's that second part where it gets people into trouble, where I don't think people have an honest view of what your net asset value actually is. Which I mean, people like question like, this company trades at 0.2 NAV and all their peer groups trade at 0.4. Nobody asked the question, well, maybe it's the denominator that's wrong over here and not the numerator. So we're pretty disciplined on that, and so long as we do an accretive deal, that's the first thing. So our view on M&A is that we were always looking. We need to see things that can work technically in jurisdictions that are not going to be pulling our operating team away from things that they need to do. We're still a small group. I'll give you an example. Is that we were looking at I thought what would be an accretive transaction in the Americas for an asset that most investors would view it smelling like it belonged in Mako. So I think it would have been like a pretty simple deal, and on strictly from a financial perspective, even with a disciplined view of the assets, it would have been accretive to us. And I had to kill that deal because it was clear that our team was going to get pulled away because it was in a different jurisdiction and it would require a lot of handholding and work. And in fact, it actually looked a lot like San Albino in terms of how much handholding it needed. And it would have ripped apart this organization from an operational perspective. So that was one where financially it made a lot of sense. And that would have been a share-based deal. So I wouldn't have any issues of issuing shares because it was clearly accretive even at that point. But it broke down because it would have pulled away our operating team for our other assets. That being said, we have been looking at assets and in jurisdictions that wouldn't pull us away, and we have obviously we're in Nicaragua, Guyana, the United States, as well as some other jurisdictions that we sort of have a footprint in as well. So there have been opportunities that we've been looking for in those areas, and the opportunity set is, as I said, even though like valuations have certainly changed over the last year, we've been able to advance discussions pretty robustly on a few of those, to the point where I'm actually very confident that we're going to be pulling the trigger on other acquisitions. So the first point, it always starts with the number, right? Is it accretive on an NAV per share basis if you apply a disciplined view for what NAV is? And so long as that is triggered, at basically, and it doesn't pull our operating team away, where it actually reduces the value for other assets for that reason. So if that actually winds up being the case, then great, it's an acquisition that we can go and advance. And then how to finance it. So how to finance it is, well, that's kind of where there's a lot of opportunities available to us these days that didn't exist a year or so ago. And likewise, we have a lot of tools within our toolkit that other mining companies don't have access to, right? That we often get criticized for, right? In fact, most of the time we get criticized for. But we are not embarrassed to use things to our advantage, and we're perfectly happy of basically having the peanut gallery always complain about stuff that we do, knowing that the stuff that we do is really there for the entire purpose of trying to maximize the value for our shareholders.
And obviously, just to make this clear, people who are tuning in here, that's Wexford, the largest shareholder. They can be.
It's Wexford, shareholder. It's Sailfish. It's our operating team. It's the fact that it's the fact that at the end of the day, you have a CEO here that also knows a little bit about like finance and accounting. Like I always find that like amazing, is that I have an engineering background, not a geology one. Is like, but like when we first started, we always get criticism like, what are you doing? You're not a geologist. How do you run a mining company? And you would have like the same people go as like when people ask questions about their accounting. Well, I'm just a geologist. I don't know anything about accounting. And it's like, you're CEO of a public company. You need to have like a certain baseline understanding of everything that's available to you. And this industry has some of that. So it's not like everybody is completely out of their elements in terms of like running an actual corporate business. But I would say by and large, just because of how people have advanced their careers in this industry, a lot of people in our snack bracket type companies are just very ill prepared for running an actual company. They're basically looking at this as exploration projects and nothing more, even when they turn into mining companies.
So probably the biggest constraint is that the acquisition cannot cannibalize the bandwidth required to advance the existing assets. That's the biggest.
Yeah, we had our I guess it's going to be like a semi-annual offsite at our Tucson office. So we got everybody from now all three jurisdictions, and so it's unusual that everybody's there in the same room together. And I remember like last year we had the same thing, and I would give my speech. And then this year I'm like looking at like everybody that's there. This is a much bigger company than it was in 2024. It was actually stark. I had to like take a little bit of a breath that we've actually grown very quickly. That being said, when you're growing quickly to support the assets that you have, it's very, very easy to get things out of control. So we're good. Like at the end of the day, I'm very aggressive. I do have sharp elbows in this business. That being said, I'm also disciplined enough to slow things down when they need to be. So it's a combination of the two.
So you've elaborated now quite well. I think that gives people a good sense of where your thinking is at and where the strategy is at in respect to acquisition. But more specifically, you have some ideas. It sounds like they would be in this situation then likely in production and not that either in production or something that would get into some sort of time or intensive development a bit further out. Or could you
Uh,
characterize the advanced ideas just
yeah,
generally?
well, I would say, yeah. I mean, it's we'll always if there was if there was an asset. Well, I mean, think about it from like, even from an exploration project. If we actually had like a really good view on an exploration project that actually didn't require all that much like handholding and support, because it's an exploration project at the end of the day, and we knew that we were buying it cheaply because it was clearly going to be accretive to NAV per share. Sure, like in fact, in many respects, those are actually like easier transactions because it's really like it's really the mines that can blow up your company if you do it wrong, because there's just so many things that can go wrong with a mine. So I wouldn't preclude that. That being said, if you actually look at what Mako's I don't know the right word, because I wouldn't exactly call it like a deficiency, but like in terms of things that it probably needs bigger to get like more relevancy, if that's actually like an objective. So we're probably small on the production side of things, right? So as of now, we have a run rate of maybe a little over 40,000 ounces a year, and then Moss is gonna take that by 2x, right? And then you'll have Guyana over time. But as of today, we're still a relatively small company. So the stuff that we're going to be looking at in terms of solving certain corporate things that probably we screen a little bit poorly on versus others. Yeah, sure. Like near-term production is good. I think our team is generally set up to advance projects quickly. We are a bootstrapped company where applying capital to another asset that's in development is useful, right? So that's actually an advantage. So I think it's probably we are biased to things that are either in cash flow or soon to be in cash flow. We are more biased against in favor of buying something that is accretive, but we wouldn't preclude doing something that so long as you actually have like a disciplined view for what the NAV is and what you're giving up to get it, then I don't think we have any like particularly like major issues of buying a cheap, longer dated item either.
So let's say the probability of you acquiring something of significance, just put it that way, in the coming, say by mid next year when Moss is sort of up and running well, at that point in time, what would you assign the likelihood of that being?
High, I would say.
High. Okay. Well, last time you said so, an acquisition happened quite quickly, so we'll take that seriously. But let's shift gears to Moss then briefly as well. The production was scheduled to start in July initially, but now it's going to be very soon. I guess in the next week, end of this month.
Right. So yeah. So yeah, well, first of all, like all mines have some issues with startups. I'm probably a little bit more vocal about them than others. Our plant was ready to go in April, and
Yes.
that being said, when we put out this to bid for our mining contractors, we were like, it really was a bidding war between them, and we let that happen. So this was not a delaying this from early April to late June was not an operational hiccup, right? So that was intentional to get us the best price of the mining contract. Ever since the end of June, though, that was some issues getting equipment to site. So we hired the winning bidder of the mining contractor had about 70% of its fleet in Mexico, and then 30% of its fleet in the United States. And 30% got there no problem, and then the stuff from Mexico has like been dribbling in, and we still don't have like everything that we need from there. They've found some alternative kludgy mechanisms to get things to site. So over the weekend, I posted on Twitter that we actually started mining on Saturday, but it's kind of like this weird little mining where you have this like really large wheel loader that's loading into these like replacement vehicles that are undersized by 60%. So you have this like big little loader like loading into these 40-ton articulated trucks. Obviously, that's not like ideal for the long term, but we've effectively started mining already. Like all of the stuff that got delayed is now starting to walk its way out. We're going to get 2 of our 5 777s delivered to site on Wednesday. We need to schedule some police escorts to walk the trucks through. Throughout all this process, it would have been a bigger issue if we didn't actually have the residual leach. So when we at our nadir, from an employment perspective, like we had direct employees of about 26 over at site. That got taken down from 129 when Elevation was running it. So it was actually, even with residual leach, it was actually generating a lot of cash. We repaid the entirety of the acquisition costs through that. Since that time, the residual leach has gone down, right, as you would expect it to do, because you have your leach curves. And then we needed to ramp up our G&A to support like a full mining operation. So we're now at about 64 employees. And then that's going to be going into probably the mid 80s by the end of the year. So we were probably kind of on the cusp of cash flow break even at this point over Moss. So it kind of like needed to start. Additionally, obviously this wasn't intentional, but we are a little bit constrained on one of the pits that we're going to be mining because we need to get an EA amendment. So those discussions have been very proactive and good with the BLM. Hopefully that will get delivered by November. This obviously net this 8-week delay was not good. The good thing, to the extent that there is a good thing about that 8-week delay, it means that that wall of when we actually need that permit amendment has also been pushed back. So it takes a little bit of pressure off of that. But yeah, I think for most investors that actually did not have the context of this story, they could barely see it just because we're still effectively a cash generative business, more or less, even in our current G&A state over at Moss. But mining has started. We started stacking. It takes probably about 13, 14 days for full breakthrough. So you're going to start seeing grades come up, and then there's going to be a profitable mine like now, like as soon as breakthrough happens.
Right, and I mean, basically now, if you just outline what you're really looking at, they're getting mining now. What are you paying close attention to, and the team paying close attention to, that this has to work for you to get confident that the ramp up is sort of on schedule as you're expecting it? What can you explain that?
We're redoing the geological model to get us better control over what grade expectations are going to be. Obviously, we had a complete rehash of the lab. So it's almost like we need, before we actually have like a fulsome understanding about what our projections are for Moss, we need to go through that process first. It goes back to kind of like the strategy that we often get criticized from our investors, like, well, you first have to do this, and you have to drill this out for 8 years, and then once you actually have like a mine plan, and great, then you can go back to the market for financing and sort things out. That is a model, and a lot of people are used to that. For us is, all right, do we have like a view of what this asset should be, how it's what it's worth, how it is valued? and how do we advance it while like bootstrapping our ability to invest capital in the most prudent fashion possible. When you look at it from a return perspective, there's no choice between those two business models. The way that we do it is a much better way of generating real returns. The other model is a much better way to keep investors having a good night of sleep, because they know that they have like a good Excel model to underwrite their business objectives. So to me, our big thing right now with Moss is what is the initial project going to look like without like major permit changes. So this assumes that we do get the EA amendment without major ones. That is starting to open up for something far in excess of what we wound up underwriting this thing at. And in fact, I'm actually surprised with some of the numbers about what we can do with some minor permit amendments. And I'll give you a little anecdote about this, is that Elevation, and I think prudently so. So I've criticized Elevation for doing a lot of things. One of the things that we would have probably done in their shoes as well was to avoid the federal government EIS process, so the NEPA process for the government. It was a mess. There's another company that we're loosely affiliated with that put out a press release saying they just got their EIS on a U.S. Nevada-based gold mining asset, and it was the first one delivered in over a decade. In the United States is like one of the largest gold producers on the planet, right? So it shows you just how bad the permitting situation in the United States was. So they went about their project to get these relatively small scale environmental assessments approved. And then when they ran out of space and what to operate, they always entered into effectively a land swap with the BLM, saying, we have 493 acres to play with. I need to get these 5 acres to continue my mining operations. And the BLM said, that's fine, just give me 5 acres somewhere else. And they would play this game of I'm trying to think what that game is, where you have like those little squares that you move over here. So it's a little swap game. And then we were, just because there was such an urgency of getting this permit to access some of the stuff that we needed on one of the pits, we actually tried to approach the BLM with the same thing. It's like, look, we're going to do a land swap over here. Once we actually get that, we're going to do like a full EIS and start opening up the thing for the permit. And they said, like, hold on a second. It's like, what do you actually need? What do you want? Do you have baseline data to support it on different grounds, like over here, like environmental, archaeological things of the sort? And they said, so long as it's contiguous to the property, it's within the confines of what the initial spirit of the EA was, you don't need to do this like land swap stuff. So it was actually the BLM that offered us, what you should apply for is not a continuation of this 493 acres. We'll give you like an extra 30% and take this up to about 650 when all is said and done. Might not sound like a lot. In doing that, it opens up everything, right? So when we looked at this from an investment perspective, it's like we knew that there was like about 6 years of resource before we had to really explore for anything in terms of what we needed. But without moving things in infrastructure, we really only had like space to mine this thing for about 3.5 years before we had to make a decision to move the plant or open up our permitting situation from that point in time. We get this permit on that 650 acre basis that opens us up. We can run this thing without any major capex requirements other than like building additional pad space to run this thing for 7 years without doing anything. And then on top of that, we probably have like a baseline, so provided that we have exploration potential, to start running this thing for a long period of time. And we already have some indications that there's going to be like new deposits over on this mine. So what started as an acquisition, which has now been fully repaid, and then some. So we're basically in this for zero. You're looking at something that's going to be like a 40,000 ounce a year producer thereabouts that will generate at these gold prices, probably something pushing close to 50 million of EBITDA. That when we looked at it is like, all right, well, we're operating under the assumption that there's like a 3.5 year window and then we'll have to do stuff, even though we have like expectations it's going to last longer than this. It ain't looking like that now. This is looking like a real continuous operation. We'll put out our initial economics of the project probably in early November. That also has been delayed a little bit, just because the more we look into this, the more we actually have to redo some of the data that they've or actually they rehandle some of the data that they've put through. So that's probably going to be an early November event. And even though that's also going to be somewhat constrained in terms of what we can show, it's going to start showing. It's like, it goes back and it's like a head scratcher. We took a lot of criticism for buying this thing, where I just think the industry was lazy about this. They didn't understand like basic bankruptcy law. They didn't understand like what it meant to have like on the ground operating experience in Arizona. They didn't know what it meant to actually have direct relationships with the government regulators over here. And I think people were just asleep over at Elevation, and that's why we were able to pick it up for the price that we did. But this, to me, I mentioned at the time, and I don't think it was like all that risky of a statement for me to make. Like on a percentage basis, I think this is one of the most accretive transactions that have happened in mining history. Period.
We'll see. I mean, it's looking like that, really. So, 2026, what do you expect the production to be? What do you think is realistic to expect?
Yeah, I think like I think it's obviously going to take time to ramp up. So it's so caveat about 2026 is like, I think the target for like a 40,000 ounce like equivalent basis. So let's call it like a 36,000 ounce run rate with the silver byproduct credit, which is now fully unencumbered by any royalty, is like it's probably.
And you feel that to be sort of very realistic. You don't see any big potential risks on executing on that.
Well, I mean, the big risk that Elevation had that we think we can manage, although the proof is in the pudding, is is whether or not we can blast the rock appropriately. Like this is the trickiness of this ore body is not really like the processing is actually pretty good. The recoveries are pretty. There are like a few improvements that we made from the heap leach, but the heap leach was actually in pretty good shape. The real risk, if you actually like stripped out the balance sheet issues and the bloated G&A stuff, which obviously was huge, like the big like actual operational risk, there was like literally dozens and dozens of things that they were doing wrong, but like only one of them actually accounted for about 70% of their issues. So that one thing was like, how do you manage oversized material, right? And that involves very, very detailed oversight of your blasting contractor, making sure that everybody kind of knows how to manage these patterns based on lithology and geology. We haven't actually. I think our first blast is scheduled for tomorrow. So, like obviously, we have the data that we have to support that we can do this better. Right now is literally zero. Right, so it's still an open question mark. But we're pretty confident that we'll be able to get this under control. And if that happens, then yeah, you can get this thing as. So that does two things. One, it limits your mining costs. So Elevation, because of that oversized material, was pushing close to $5 a ton of mining costs. So we think we can shave off at least $2 of that. And this is an operation that does about 23 million. I'm sorry, about 13 or 14 million tons a year. So that's going to be like a pretty large number. Like if you multiply that by 2. And then also from a throughput perspective, is that a lot of the reasons why the plant never really got up to a continuous level of 10,000 tons a day wasn't the size of the plant. It was really just like the oversized material that needed to be managed. So if those two things are eliminated, you basically have lower cost, higher throughput. Pretty easy for your unit economics to show the results of that.
And I guess, I mean, this is the main thing. You would probably know this within a month or two to sort of see, okay, we've got the handle on this. Do you expect to press release that out to just describe, okay, we're running at 10,000 tons per day. We're mining at this cost effectively now for a month? Because that's a huge deal, because that's the previous major fuck up of the previous owner of this asset, and you've been able to resolve it. Is that the
sure? Sure. I'll put out a press release when we get to. I think I owed people a press release about our little kludgy operations. I'll put out a press release that we're mining. If anybody actually sees what we're doing from a mining perspective, they also would laugh. Like this is not what Mako is going to be doing in the long run. But yeah, so we'll put out a little press release that mining has started. But you're right. There's still actually quite a few things that we need to do over the course of the next couple of months to get this thing up to steady state.
Yeah. And then I want to ask you about the acquisition of the Elevation debt.
Mhm.
Can you just break down the logic? People who didn't understand that press release. Why
Yeah.
did you acquire that?
All right. So this was a Canadian CCAA bankruptcy. So a Canadian bankruptcy, because Elevation was a Canadian company that had a contemporaneous US-based bankruptcy called Chapter 15. And Chapter 15, like most people are familiar with, Chapter 11 restructuring, Chapter 7 liquidation. What Chapter 15 basically is just allowing a foreign jurisdiction to have kind of like some being the nexus of where the decisions are effectively being made, although there's some specific decisions that need to be made in Arizona. So what we acquired originally through Wexford on New Year's Eve, and then eventually through Mako on March 27th, were the underlying shares of the U.S. subsidiary Golden Vertex Corporation, subject to all of the liabilities being vested away, right? And this is something that I think fundamentally, like other mining companies, just don't understand basic bankruptcy law. So you can structure something that we can acquire the shares of a company, so an ongoing business, but approve the vesting away of certain liabilities unless they were on the balance sheet. That being said, so even though we got rid of things like the stream, the various unsecured and subordinated secured debt obligations over the company, a lot of liabilities, close to $70 million on the balance sheet, went away associated with it. There was also litigation over two royalties that still exist over at Golden Vertex, that's under litigation in the Arizona courts right now. So when we acquired those shares in December 31st, or when Wexford acquired them, the Canadian judge allowed the sale of those shares to happen. Right. So we sent in. It was like other stuff that went with it, but the purchase price was $4.65 million, and that went to the senior creditors. And then because of this litigation in Arizona, the royalty holders allowed for an injunction on the rest of the collateral situated in Canada, which we've announced is materially less than the overall value of the claims, which are over $70 million. It's materially less than that. So this is not going to be like a $70 million win for the company. It's going to be much, much less than that. But it's still sitting in Canada until the U.S. litigation was resolved. The senior secured creditor was another royalty company called Triple Flag. They were the owners of the stream, and then they were the owners of various senior secured pieces of debt. Right? And all of that was backing the remaining collateral that was held in Canada, just tied up until the U.S. litigation is complete. So we bought that. On top of that, if people remember the structure of the deal, if we were victorious in wiping those royalties, both of them, we would have owed the estate another $1.5 million US. Right. So that would have gone to the estate, and by extension, it would have been given back to the senior secured creditors. So what we did is we bought $1.8 million for $1.8 million. Any additional collateral that's there, which it's actually public record, but also, although I don't like to talk about it just from a framing perspective, feel free to go to the Arizona courts if you actually want to look at it. So it's much more than $1.8 million, but much less than $70 million. That's there. Plus, it eliminates any potential for us to have to pay that $1.5 million because it would just go back to ourselves. The other reason why we did it is because we wanted to be in control of the litigation, because Triple Flag, this was not a material part of their business. They're a much larger royalty company. They just completed a $350 million Canadian acquisition for another royalty company. They've got bigger fish to fry, if you will, than our little fish. So it allowed us to be in direct control of that litigation. And then for those that know something about me, and like I also have very sharp elbows, and I thought that litigation was going to go in our favor as part of that. So we'll see. We've gotten some indications of that, but we'll probably know from the judge in the next, I would say by mid-October. So kind of like in the next less than 2 months from now.
And
Now,
then Just very briefly, if the ruling goes in your way, what's the consequence? And if it does not go in your way, what's the consequence after you structure this deal?
All right. So if the ruling goes in our way, goes in our favor, I can't envision a situation that even on appeals that the collateral that's held up in Canada wouldn't be released. So it's theoretically possible that through appeal that the judge will issue an injunction against this. I think there's a 99+% probability that if we win, that collateral will get immediately released. So we'll get something that's much more than 1.8, much less than $70 million released to us for that $1.8 million investment. Plus, we would have eliminated that $1.5 million liability associated with this.
So sorry, when you say released, how big is that windfall?
If you want to know, so there's obviously legal costs, so this number is going to come down. As of today, there's probably about $4 million right there. So that is public information. Although I didn't like to discuss it. I gave you a secret, so you forced it out of me. So there's about $4 million plus there's $1.5 million. So the way that you really have to economically look at it, it's really $5.5 million, even though that $1.5 million was a contingent liability that was just eliminated. Right. So that will get released, and then the issue over here, and what I've described to the royalty holders, if you think about what our litigation is about, right, is that it's not a question about whether the royalties have language in their contracts about running with the land. It's not a question about whether or not there is language that is associated with this being treated as a real property interest. It's not a question about language and whether or not there's a registered agreement in the registrar's office that this royalty exists. It's not a question about whether there's a deed associated with this royalty. It's a question about the fundamental design of most NSR contracts, not all, but most NSR contracts in this industry. And I think if the judge rules in our favor, it could actually wind up calling into question how some of these NSRs globally are structured, certainly in the Arizona jurisdiction where this is, but this also, because through the appeals process, will take you directly into the Ninth Circuit Court of Appeals, which includes the state of Nevada, right, which is where the biggest royalty business is located. So to me, it was always a question. I don't understand why the royalty companies didn't try to eliminate what this court hearing is about. We'll see. Now that I have my spidey sense is that we're going to win. It's not 100%. The judge has every right to rule against us, but my spidey sense says that we're going to win because I think our legal arguments are valid, and I think this is going to have potentially broader implications into the royalty space. So I wouldn't be surprised either to have an abrupt settlement because some of the largest royalty companies in the world do not want us to win.
Okay, that's a good summary. Then finally, before we end, you're intending on listing on NASDAQ, which can be a huge deal, obviously. What's the timeline? And just sort of, I guess, opine a bit on your thinking. I think it makes total sense, but just talk about it.
Yeah, so where we are, right? So we're intentionally going to be listing on the NASDAQ as a foreign private issuer. To do that, which means our overall accounting basis is not going to change. It'll be an IFRS issuer as opposed to a GAAP issuer associated with this. PwC required them to review our IFRS through some sort of acronym that I don't even know what it stands for. So I think they're finished with that. I think it was just like an excuse for them to charge us like $20,000. Although I'm sure there was valid reasons for them to do this. And now that they've approved that, they now have to go through a globalization process, whatever that means. And then they said that will take about 3 weeks to get done. Other than that, we've changed our governance structure to accommodate for NASDAQ, inclusive of replacing one of our board members to accommodate that. So I think we're ready as soon as we get final thumbs up from PwC, which we expect in about 3 weeks, then we can submit our application. And then my communications with NASDAQ is that it can be a 3 to 7 week process after that. So I don't know, what does that actually take us to? I think probably early November, if I had to guess, something like that.
Yeah, so basically we're expecting quite a bit to happen between early October and late November. It's going to be a very rich sort of period for Mako. So I think we'll check in probably again on the back of the release of the economics for Moss. Then you would probably be public in the US as well, and then.
One is not like, obviously there's a completely unrelated events, but like, randomly speaking, it happens to be about the same time.
Exactly. So we'll speak again at that point in time. So great to check in. We'll see you in a few months.
All right, great. All right, appreciate it. All right, thanks, Gorm.